Let's start the show and invite the first corporate, LatentView Analytics. It's reported its numbers yesterday. The numbers look good. It's a 48% growth in their revenues. However, margins have come under pressure in the March quarter. They've come down to levels of about 30.5%, lower by 500 basis points. The stock is currently hovering very close to that 400 rupee mark, which means from its issue price of 197, the stock has still doubled, but compared to its lifetime high levels of 754 thereabout, the stock is down 47%. We're joined by Rajan Sethuraman, the Chief Executive Officer of LatentView Analytics. Mr. Sethuraman, morning, and thanks so much for joining in. This is Rima here. First, if you could tell us the reason for the margin contraction in Q4. It's currently at 30.5%. Where does it go from here?
Hi, good morning, Rima, and thank you for having me on the show. On the margin contraction itself, it's been largely driven by the investments that we have been making in a few areas. We've been adding to the front-end sales and business development bandwidth, and we have been also investing in terms of the capability and the assets and accelerators that we have been building up. So these are all planned investments that we are making to capitalize on the growth opportunity that lies ahead of us. During the roadshow as well, we had guided that our margin range, historical margin range, is something that we are comfortable with, and any supranormal margins we generate, we will be very keen to flow it back into the business. So it's in line with our strategy, and we are fine with the margins at this time.
And the historical margin range is 25 to 28%. Is that the range?
That's correct, yeah.
Hi, Mr. Sethuraman. Nigel on this side. I recall when we had a chat, you were telling us that margins will go back to pre-COVID levels, so you're sticking to that. Also, when I egged you on about, when could you hit 500 crores in terms of revenues? Will it be 24, 25? It appears it could be sooner because you're already at more than 400 crores odd. You have had a good year in the past year, and as you mentioned, you will outgrow what the industry is doing as well. Industry is slated to grow by around 18 to around 20%. So 500 crores is there for the taking in FY23?
Yeah, I would say so. I mean, we feel comfortable with the demand outlook at this point in time. Of course, there is some concern that you're hearing about slowdown and recession and so on. But based on the conversations that we have been having with our clients and stakeholders as well as prospects, the demand momentum seems quite strong. So we should be able to get to that mark in the next few quarters.
Can you tell us a bit more about what the clients are saying about the volatile macro uncertain environment that we're currently in? Is there a pushback in terms of pricing maybe, or do you think budgets could get squeezed? Because the financial profile of many of the corporates is going to come under pressure in the next 12 to 18 months.
Right. I mean, you would have seen the results that were announced by some of the retail sector players, like Target, for example, and tech companies like Snap. You saw this morning, right, that their share price came under a bit of pressure because of advertising revenues. But having said that, technology and digital native businesses, many of the initiatives they had kicked off 1-2 quarters before, and these budgets were finalized at the end of the last year. We still see fairly strong commitment and momentum right on those budgets. In fact, there are several conversations that we have initiated in the technology and digital native spaces, which are much larger just in terms of the size of the deal. And they also include upfront consulting diagnostic exercise. So we see good momentum there. Retail could potentially come under pressure based on inflation and consumer spending, but it is still early days at this point in time. So I would say that overall, there is good momentum.
All right, Mr. Sethuraman, what is the cash in your books that you have? If you could give us the updated number.
So we had a fairly significant amount of cash, close to 400 crore, 450 crores from the earlier, prior to IPO, and that plus the IPO proceeds, it's a fairly big chunk that is available at this point in time. We are actively focused on inorganic opportunities, right?
Mr. Sethuraman, the last few times we have spoken about, you have been telling us you're sitting on good amount of cash, you're looking to deploy it. Could you give us a timeline now? First half of this fiscal, do we see that inorganic growth take place? And if yes, could you tell us what could be the potential ticket size that you're looking at? Please go ahead.
Right. So I can't commit to the first half of the fiscal year. I mean, I think as per the SEBI requirements, we do have a window that is available for deploying the proceeds. A big chunk of the proceeds will really go towards inorganic. Given that this is the first time that we will be doing an inorganic acquisition, we do want to be careful and consider in who we look at. We have till date evaluated about 2 dozen opportunities. There are about half a dozen of them that are currently under close review. So we are making progress on that front. We are expecting that we will be able to conclude something in the next few quarters. The ticket size that we are looking at can range anywhere between 10 to $20 million. Of course, depending on the margin profile and the profitability, there will be appropriate valuations that it will attract. We want to take on something that we will be able to easily understand and integrate into our organization. It will be the first time that we will do it. So we do want to be careful and considerate about it.
You're saying half a dozen of them, 6 of them are under closed review for a potential acquisition and integration with the company. Can you close it by first half of FY23?
Yeah, that was the point I was making earlier. I mean, these transactions will take their time depending on how much due diligence is required.
All right, Mr. Sethuraman, we are giving you a longer handle. Both of us want to know whether or not it's the first half. What about FY23 at least? The acquisition will be closed?
I would be more optimistic that we'll be able to do in the next this fiscal year.
Okay, FY23. And talking about FY23, you're saying revenues could hit 500 crores, right? In terms of top line?
That's correct.
Okay, and margins should get back to your historical range of 25 to 28%.
Yeah, we will be comfortable with that range. And if we see that there is a bigger uptick, you asked a question earlier about pricing pressures. We are not seeing any pricing pressures. Clients are understanding and we've been able to obtain price increases for much of the work that we do. So that will contribute to the margin as well. So
pricing is going up?
Yeah, we have been able to jack up pricing in instances. I would say that it's moved up by about 10 percentage points. That has countered some of the wage inflation that we had over the last year. So net, we feel comfortable with the pricing versus the cost that we have on the wage front.
And no tech budget squeeze as of now?
Not at this point in time.
And you said retail could come under pressure. That's about a quarter of your revenues? Not
really. Retail is a fairly small percentage of our revenue at this point in time. Tech is really 70%.
Okay.
Yeah, 65%. So, I mean, I said that it could come under pressure because of what you're seeing in terms of results that the retail companies are putting out. But you never know. Sometimes you also have this as an opportunity to double down on digital spend. Hospitality, for example, a year and a half back, one of the largest accounts that we have today, they actually decided to let go of a lot of their internal analytics team, but they relied on us to provide the analytics support. So that could also pan out.
Well, digital is no longer good to have, but a must-have now. Thank you very much, Mr. Sethuraman, for joining in. That's the word coming in from LatentView Analytics. Need to get into a very short break on that note. On the other side, we'll discuss